for tuning in today. My name is Sue LoGuercio, your local neighbor and realtor from San Z Realty, coming to you from parkbench.com. I am so excited today to interview Samantha Scher with Movement Mortgage. How are you today, Samantha?
I'm good. How are you today?
I'm doing really well. I'm so excited for people to learn about your business. Can you tell me a little bit about your business and how you got into it?
Absolutely. So, right out of college, I was actually looking to move back to LA. I was at Ann Arbor, Michigan at the time, and one of the only people or companies hiring was Countrywide Home Loans, a name of the past. But anyways, I went ahead and started working for Countrywide and learning the mortgage business right out of college. And it got me back to Los Angeles, to my hometown, and I learned all the basics of lending, from underwriting to processing to funding and closing. And I did their training program. And then I worked for Countrywide for about 7 years. And then I went and got my MBA at USC. I worked for IBM and even worked on a startup with my husband. And after having our second child, I thought, you know what? I think I'm ready to just have more of a job where I can work from home and have some flexibility. And so I decided to get back into the mortgage business after taking a few years off, especially during the 2010 recession. So it was nice to get back into it. When I got back into it was 2014. And I started working instead before, when I was at Countrywide, I was working for the wholesale side of the mortgage business, working with mortgage brokers. After the mortgage meltdown, mortgage brokers kind of went away. And when I came back in 2014, I became a loan originator working directly with buyers. And all of my referrals come from realtors like you, Sue. So thank you for all of your referrals over the last several years. I love working with you.
Working with you too.
Yeah. So I worked for Movement for about 4 years so far, coming up in May. I love working with Movement Mortgage. And the reason why is because we underwrite all of our loans first. That's the first thing that we do once a client either gets into escrow or pretty soon coming up again, we'll be doing that at the pre-approval stage. And what that means is when you're making an offer as a buyer, you really want to make that seller think like you are cash. And I don't talk to any cash buyers because I only help people with loans. But I know that if you were a finance buyer, you really want to make your offer stand out among the rest. And because there's so little inventory, right, Sue, right now?
Gosh, there are not enough sellers and so many buyers right now.
Exactly. So you have, on average, how many buyers do you have making offers on one property, do you think?
I just today, a property went on the market, and just today I tried to get a showing for tomorrow, and there's 56 showings for the weekend. And already ridiculous amount of offers. So
exactly.
You have to be prepared, especially with the pre-approval. Yes.
Right. So for a new buyer, you'll want to have your pre-approval letter ready to go. And that's something that I would provide your buyer. And then when the buyer makes their offer, they want to stand out. And the only way to stand out, instead of being, besides just being a cash buyer, is to try to close as fast as you can, because all the seller wants is their money and run, right? They just want to get on with their lives and sell that house as fast as possible, get the cash in their hand. And the way we do that at Movement is we underwrite the loans as soon as it goes into escrow, so usually within a couple of days, and then we can close within roughly 21 to 30 days. That's a huge advantage over working with a big bank like Chase or JP Morgan or Wells or whatever, you name it. That's because those big banks take 21 days to underwrite a loan. And I told you we're running, 2 to 3 days?
Yes.
That's a huge difference in the seller's mind, don't you think?
Yes, absolutely. It's very important and great, yeah.
Yeah, so the seller only has to maybe not sleep 1 or 2 days till they find out their buyer's loan has been approved. And then we can close relatively quickly from beyond there, where us, the bigger banks, they're taking usually 30 days standard and sometimes ask for extensions beyond that to go to about 45 days. So if you were a seller, you don't want to have to wait 45 days to close. You want to close closer to 30 or 21 if possible.
Right. Now, I've worked with you on several houses here in Claremont and Fashion Valley, around San Diego and Southern California. Can you tell our viewers a little bit about first-time home buyers and maybe programs that are available for them?
Absolutely. So the first step, just so you know, to getting a mortgage is really to have a conversation with me and we get you pre-approved and we can look to see what you qualify for. Most times, if people have never purchased a house before, they don't even know where to begin, right? So it just starts with a quick conversation with me or a lender, and we'll tell you what you could qualify for. In terms of how much payment, how much of a house can you qualify for, if you have a down payment, if you don't, and what programs. If you're a first-time home buyer, and that could be for somebody who hasn't owned a property in the last 3 years, can be considered a first-time home buyer. And there are some great first-time homebuyer programs available. One of them that Sue and I have used several times is called CalHFA, California Housing Financing Authority. And you can Google it and find out more information. But what that means is for those people in San Diego County, the maximum income they can make if you're a dual income household is $183,000 a year, and that's for 2021 so far. And it means that the first-time home buyer doesn't need to bring in really any down payment. It's usually, they need to bring in some skin in the game, and it's usually about maybe a little bit more than 1% of the purchase price. So if you're looking to buy maybe a condo at, let's say, $500,000, it's usually about $5,000-ish that you would need to bring in. Then the state covers the down payment of 3% and your closing costs, so which is usually 3%. So really, you buy a $500,000 house with $5,000. You only need you need a pretty good credit score, 700 credit score, and we can talk about if your score isn't there yet, what we can do to get it there.
Okay, and I've heard a little bit about renovation loans. You see people building these granite flats, or with COVID going on right now, you have so many people wanting to buy and renovate their house. Is there any loans that are out there for that?
Absolutely. There's lots of different options. There's one program called the FHA 203K loan. That's through the FHA loan program, where it's a simple calculation. Basically, you take the purchase price plus the amount of repairs you want to do, and that equals the newly renovated value. So A plus B equals C, right? A is your purchase price, B, the renovations. Let's say you look at a house and you say it needs the granny flat. The only way I can make this work is if we do this ADU. And that's going to cost, I don't know, 100,000. Right. So you find a house that's, let's say, 700,000. You add the 100,000 of repairs. Now the new renovated value, just for lending terms, we're going to say is 800. It might be more than that, but we'll just say it's 800. Then the client only needs to put down 3.5% on 800,000. They don't need to come in with that 100,000 for the repairs. What happens is they put 3.5% down on the 800. That 100,000, they close the house is theirs, right?
Right.
Then the contractor comes out, and the 100,000 that they got as part of these renovations gets put into an escrow account, and it gets paid to that contractor in installments. So every time he finishes the phase of the build. So it's a great program. It's 30 years fixed. You would never have to refinance unless you wanted to, but it's a great way to be able to get the house you want and with the repairs you need without spending a lot of money out of pocket.
That's excellent. That's excellent. How about, is it a good time to refi right now?
Yes, it's still a great time to refinance. Anytime you can lower your interest rate by at least 0.5%, you're good to go. I'm seeing rates as low as maybe 2.5 to 2 3/4. It all depends on credit score and loan size and how much you owe and all of that. But you'll see low rates out there for sure. And after this recession that we're in, rates might even come down a little bit further.
Wow. Wow. Interesting. Good to know. All righty. My two little helpers here want to thank you, Samantha. I brought them along because otherwise they'd be barking through the whole interview. So they're hanging out with us today. Now, if people are interested in possible loans and contacting you, how would they go about that?
Well, it's best you can always call me or email me. Do you want me to give my information here?
Sure.
Okay. So you could call me at 310-968-4046, and you could also text me there as well. Or you can email me at samantha.scherr@movement.com, and it's samantha.scherr@movement.com.
Great. Thank you so much for so much great information, Samantha. That was wonderful.
Awesome. I'm glad to help, Sue.
Oh, sure. And thank you for viewing. If you're a business owner and would like to be featured on parkbench.com, please contact me at suemovesview@gmail.com, or you can call me at 858-866-4663, which is home. Thank you again today, and look forward to next time.